If you have student loans, do not skip this video. Starting this year, millions of borrowers are facing changes that could cost you over $10,000 in unexpected taxes. The SAVE plan is gone. 9 million people are at risk of default, and the government just changed the rules on loan forgiveness taxation. I'm going to break down exactly what's happening, how it affects your wallet, and the 3 steps you need to take right now to protect yourself. Stick around until the end because I'll show you a legal loophole that could save you thousands of dollars. Hey everyone, welcome back to the channel. If you're new here, I'm your name, and on this channel, we break down complex financial topics into simple, actionable advice that actually helps you save money and build wealth. Before we dive in, if you want to stay updated on the latest financial changes that affect your money, and trust me, 2026 is full of them, make sure to hit that subscribe button and turn on notifications. We post new videos every Tuesday and Friday to keep you ahead of the game. And if this video helps you today, smash that like button. It really helps us reach more people who need this information. Alright, let's get into it. So here's what's changed in 2026 and why everyone is freaking out. First up, and this is the big one, student loan forgiveness is now federally taxable again. From 2021 to 2025, if you got your loans forgiven through programs like public service loan forgiveness or income-driven repayment plans, you didn't have to pay federal taxes on that forgiven amount. It was basically free money. But starting January 1st, 2026, that tax exemption expired. So, if you get $50,000 in student loans forgiven this year, the IRS is going to treat that as $50,000 of income. Depending on your tax bracket, that could mean a tax bill of $10,000 to $15,000 or more. Here's an example. Let's say you're in the 22% tax bracket and you get $40,000 forgiven. You could owe $8,800 in taxes. That's a massive bill that most people aren't prepared for. Second major change. The SAVE plan, that's the Saving on a Valuable Education plan, has been eliminated. This was supposed to be the most affordable income-driven repayment plan with lower monthly payments than other options. If you are on the SAVE plan, you've probably already received notices that you need to switch to a different repayment plan. Your options now are the PAYE plan, the IBR plan, or the standard 10-year repayment plan. The problem, most of these alternative plans have higher monthly payments. Some borrowers are seeing their payments increase by $100 to $300 per month. And here's the scariest part. According to recent reports, about 9 million federal student loan borrowers are currently at risk of default. Many of these people were on the SAVE plan and are now struggling with higher payments. Why does default matter? Because once you default, your credit score tanks. We're talking 100+ point drops. Your wages can be garnished, up to 15% of your disposable income. Your tax refunds get seized. You lose eligibility for deferment and forbearance. And you definitely can't qualify for loan forgiveness programs anymore. This is serious stuff. So, what do you do about it? Okay, here are the 3 steps you need to take immediately if you have student loans. First, log into your studentaid.gov account right now. Yes, literally pause this video and do it. And check what repayment plan you're currently on. Here's how to do it. Go to studentaid.gov. Log in with your FSA ID. Click on My Aid. Look for your loan servicer information. Then check which repayment plan you're enrolled in. If you are on the SAVE plan, you need to choose a new plan ASAP. Here are your best options. PAYE, which is pay as you earn. Your payment is 10% of your discretionary income, and you can get forgiveness after 20 years. This is usually the best option if you qualify. Then there's IBR, income-based repayment. Payment is 10 to 15% of discretionary income depending on when you borrowed, with forgiveness after 20 to 25 years. Or the standard repayment plan with fixed payments over 10 years. Higher monthly payment but you pay less interest overall and no tax bomb at the end. Third step, do everything possible to avoid default. Here are your options if you're struggling. Option 1 is income-driven repayment recertification. If your income has dropped, recertify your income ASAP. Your payment could go down to as low as $0 per month if you're below 225% of the federal poverty line. Option 2 is deferment or forbearance. These should be last resorts because interest keeps accruing. But if you're unemployed or facing economic hardship, you can pause payments for up to 3 years. Option 3 is consolidation. If you have multiple loans with different servicers, consolidating them can sometimes reset your default status and get you back on track. Option 4 is rehabilitation. If you're already in default, you can rehabilitate your loans by making 9 on-time payments within 10 months. This removes the default from your credit report. The key is to take action before you miss payments. Once you're 270 days late, you're in default, and it's much harder to fix. Alright, I promised you a legal loophole, so here it is. If you're planning to pursue loan forgiveness through Public Service Loan Forgiveness, that's the PSLF program, there's something very important you need to know. PSLF forgiveness is STILL tax-free at the federal level, even with the new 2026 changes. This is because PSLF has its own separate tax exemption that didn't expire. So, if you work for a qualifying employer, that's government organizations, 501c3 nonprofits, or certain other public service organizations, you can get your loans forgiven after 10 years of qualifying payments with zero federal tax bill. Here's how to take advantage of this. Step 1. Check if your employer qualifies. Use the PSLF help tool on studentaid.gov. Step 2. Make sure you're on a qualifying repayment plan. That's any income-driven plan or the 10-year standard plan. Step 3. Submit an employment certification form annually to track your progress. Step 4. After 120 qualifying monthly payments, apply for forgiveness. This is literally the best deal in student loans right now. Tax-free forgiveness, potentially lower monthly payments, and you're helping your community. If you qualify for PSLF, you should absolutely be taking advantage of it. Okay, before we wrap up, here are some resources that can help you. Studentaid.gov is the official federal student aid website. This is your one-stop shop for managing your loans, changing repayment plans, and checking your forgiveness eligibility. Your loan servicer, whether it's Mohala, Nelnet, or whoever services your loans, call them if you have questions. They can walk you through your options. And FCC, the National Foundation for Credit Counseling, offers free nonprofit credit counseling. They can help you create a budget and navigate repayment options. And IRS.gov for tax planning around loan forgiveness. Check out IRS publication 4681. I'll put all these links in the description below. Oh, you can easily access them. Alright guys, that's everything you need to know about the 2026 student loan changes. If this video helped you understand what's happening with your student loans, please hit that like button. It helps this video reach more people who need this information. And if you haven't subscribed yet, what are you waiting for? We're going to be covering all the major financial changes in 2026, from tax updates to investment strategies to money-saving tips. Hit subscribe and turn on the bell so you don't miss anything. Also, share this with anyone you know who has student loans. This affects millions of people, and most of them have no idea these changes are happening. Check out these videos next. I've got one on how to pay off student loans faster, and another on building an emergency fund even when you're drowning in debt. Thanks so much for watching, and I'll see you in the next one.